Good morning, good afternoon, good night, whenever, wherever you're watching this. Appreciate the support. My name is Joe Josh. I go by iChart Daily. Today is November 20th, 2025. In today's video, I'm going to be giving you a very simple process that you could use with a free trading view to help you understand what's going on with the overall crypto market. Not financial advice, but I've been doing technical analysis for 17 years. I've been invested in charting crypto for 10 years. And when you're doing something for so long and form such a consistent, structured, successful process and thought process, that you become numb to anything that doesn't fit your structure. It just doesn't matter. What I mean by that is news articles, tweets, people's opinions, right? And I think of it like science, meaning like if you can't back up your hypothesis or technical analysis with data from indicators, previous price action, what's happening, it's totally irrelevant to me. To you it might mean something, but to me it means absolutely nothing. And I make videos like this to prove what I'm talking about and to prove that regardless of all the good news, all the bad news, all the middle news, these things played out in Bitcoin not once, not twice, but 3 times now. Same thing, over and over and over and over. So once again, this video is teaching you how to use an SMA, 50, 100, 100-day moving average, and once again, simple RSI and potentially a stochastic RSI to help you understand like middle swings that are happening. Now, this is literally predicting when to get out of the market, like, well, not get out of the market, but officially start dollar cost averaging. If you are like just getting into crypto, you see these prices coming down, you're asking yourself, well, how low can we go? Is this the bottom? And I'm trying to give you a visual to help you understand where we could go, potentially where we could go to, and trigger points, alerts that you could set to help you identify when we're out of the blood. So let's get into it. Once again, the moving averages are 50, 100-day, 150. This is on a weekly chart, meaning every candle represents a week of trading. The green is 50, red is 100, yellow is 150. So in the past, you could clearly see once we've broken the red and the green, which is the 50 and 100, we tend to use the area of the yellow, which is the 150, as a support, right? And once again, I keep telling you that there's going to be waves down, and usually we use the moving averages as support on the way down or support on the way up, and rejection when you break them eventually. And what you're looking for, the first confirmation, is once again the candles not using the shortest of the 3 time frames, which is the 50, not using it as resistance, but officially breaking above. You're looking for, once again, golden cross structures. As of right now, we are in the cusp of breaking the green and the yellow, green and the red, excuse me, going to the yellow and then coming back up to use the moving averages as resistance. We're here, okay? People are asking me constantly, where do you think we stop? 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 Well, I'm going to give you an answer based off of what the asset has done in the past because it's a trend. And once again, here's an easier picture to see, right? Look at when the price action broke the green and the red. We went to the yellow. Now, it wasn't the end of the bear market. No, we went down 40-50% below that. But you could clearly see that once we broke one, we went to the next. We used the green as resistance, went to the yellow, used the green and the red as resistance, broke down. Candles went from above the green. Everyone sees that. Let's zoom in. This is the next bull market from 2015 to 2017. right? Candles were below, candles were below, candles were below, candles broke above, candles used yellow as resistance, candles then used red and green as support, higher highs, higher lows until 20,000. Candles broke down to green, broke green, went to red, used green as resistance. Does everyone see that? Right here, boom, confirmation. We then broke red. Where did we go to? Around the yellow range, right? And what you try and do is you figure out where the yellow is lining up with major liquidity levels, right? But once again, once we broke yellow, it was a 40-50% bloodbath thereafter. Once again, below, broke green, red, went above, came back down. We're not really looking at this because this was, I consider this the full bull run, right? Here we are now. Well, this is the previous one, excuse me. We had this break, go to 1, had a fake out, right? During this time frame, we were getting hidden bearish divergence, showing us that this move up, even though we came down, we were supposed to use this as resistance and do this. This was a fake out because the MACD, the RSI, stochastic RSI were all making lower highs, while this made a technical higher high, showing us that once again, once we broke into the trend of being below the red and the green, we went to the yellow. Okay, delete everything. Once again, bullish, we went down 40, 30%, whatever it is. We broke up, used as resistance, used as support, went to the yellow, used as resistance, used as support, and we went from 15,000 to 126. Now we're here. Now we're here. We broke down past the green, past the red. First time since October 2023, which shows us once again it aligns with the MACD on the monthly death crossing and the RSI breaking down, right? All of the bearish divergence that you were getting on the monthly fueled the weekly to break down. Why? Because long-term trends predict short-term outcomes. If your monthly is breaking down for the first time since May 2023, so is the market structure, meaning using this as support, and then now you're going to use it as resistance. Why do I think we're going to do this formation where we come back up, use this area as resistance, or maybe a little bit above? But once again, as long as the monthly and 2-month continue to go down and their indicator, meaning the monthly and 2-month indicators continue to go down, that shows me that the weekly could come up. We could use the moving averages as resistance, right? That's what happened in the past, right? We were so oversold. We went down 50% from 69 to 30,000, and we had a beautiful dead cat bounce at the yellow, going back to the moving indicators of a cool 30 to 40%. If we find the bottom around this level here again, excuse me, right here, right? If we come back down to the 78 to the 83 and we start seeing some hidden bullish or bullish divergence on at least the 12-hour, the daily, or the 2-day, then I could confidently say we are forming this bottom, and then we'd have room to go from this level back to the moving averages of a cool 25 to 34%. During that time, the news is going to tell you we are back into a bull market, but as long as the monthly and the 2-month indicators remain bearish, meaning death cross, meaning coming down below the 50 on the stochastic, meaning 2-month officially death crosses in 1 month and 12 days, meaning the RSI stays below the 70 and continues to make lower highs, lower lows to the 50 and remains below the yellow moving average. And because of that price action, we might stay above the 80 line on the stochastic one more pump. But if we continue making lower highs and lower lows on this next wave, eventually we could do something like this. We go back up to the 108 to 110, form a lower high, and eventually break down somewhere over here, right? And then once again, once these triggers happen, not my opinion, once the 2-month stochastic RSI breaks below the 80, you have the biggest 2-month red candle that has ever printed, right? You have blood, 15,000 down to 5,000. You have this one, right? We went from the break of 50,000 down to 17,000. And when this happens, once again, can we go back to the moving averages of the yellow and the green for Christmas? That would bring us down to 61,000 to potentially 50,000. How do we confluence this? I'll make this video very quick. How do we confluence the breakdowns and the breakups with an RSI? Well, cuzzzzz, if you zoom out at the entirety of Bitcoin from 2011, every time the RSI stayed below the 50 line, we broke and stayed below the moving averages. Every time we went below the 50 line, we broke and stayed below the moving averages. Even this little blip for the jab right there. Every time we broke below the 50 and stayed there, we broke and stayed below the moving averages. And that's why I was making countless videos showing you that there was a major support from the 43 to the 51. And if we broke that, we were going into a bear market. So the next confirmation that I will be watching is, do we come back up and use the 50 as resistance and stay in section B, which is below the 50 and above the 30, showing us that we are going to continuously use the moving averages as resistance and continuously make lower highs and lower lows for the next 200 to 300 days. Now, end the video with this. Once again, you want to be as curious as possible. Once we broke the yellow, we went down 60 to 44%. Once we broke the yellow, we went down 47 to 43%. Even for the jab, which was a freak, right? A freak of the news, we went down a cool 46 to the wicks of 20-30%. Once we broke down, we went to the exact low of 56% to about 48%. And if and when we break 81 to potentially 75,000, you could see a cool consolidation of, let's just say, 35% back to the all-time high area. Let's say like right here. And retest the 65 to 55,000, Bitcoin would be down a cool 57%. That would also align with the argument that each consolidation is getting smaller and smaller, right? So 89, 87, 70s, and now this would only be a cool 60%. And the argument ends with adoption. And that's how you use the news to justify buying Bitcoin at 75, 65, and 55. And that's how you justify taking profits, because I showed you a 90, 80, 80, and potentially another 30 to 40% correction on the table. Enjoy the day. Love you. Once again, alerts above the 50, below the 50. The stochastic is going to show you the intraday swings left and right. And the MACD is going to show you the overall momentum. But once again, 2 indicators on one time frame that is allowed in the free trading view. You don't need the pro. You don't need 17 years of experience. Go to TradingView, get the regular version. Also, little gem, wait till Black Friday. TradingView goes off like 50 to 70%. Do a yearly plan, and then you have a year-to-year subscription of TradingView for the pro version at a discounted rate. But you're allowed to do daily, weekly, and monthly on the free version. You're allowed to have, I think, 2, 3, or 4 indicators, so you could add an SMA and you can add an RSI. And then you could clearly just set alerts, like right-click, and you could set an alert when the price breaks the moving averages. You could set alerts on the RSI to let you know when it's breaking above and below certain sections, and then you have clarity to help you understand, have we entered into a bear market or are we entering a bull market? Love you. If you appreciate this knowledge, like the video, comment any letter, it doesn't even matter. I'm just trying to help versus the algorithm and show YouTube that people like this video. Enjoy the day. Enjoy, enjoy, enjoy. Love you.